Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 22nd. Mike Boutros with you on the horn. So we got some interesting moves here, okay? The dollar decline or sell-off seems to have at least abated in the near term. We're pretty light on data still into the close of the week. You do have manufacturing PMI numbers on tap tomorrow, but really the question has been and continues to loom on whether they'll come out with some sort of stimulus in the near term or not. Obviously, today is going to be the presidential debate, so keep your eyes on that later tonight. But as far as the setups are concerned, we're looking to see if this dollar rebound has any legs. So on the menu today, we'll hit DXY, sterling, Mexican peso, euro, dollar yen, gold, Aussie dollar, Kiwi dollar, and Swissy. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. So here's DXY. Okay, deeper cut than expected. Definitely the sell-off took a little bit deeper of a move. Here's the 618 retracement of the rally off the low that we made back in August. We've probed through that, but on a weekly basis, it's still holding 92.89. Watch that into the close today, rather tomorrow on Friday. The big region of support and the reason why I can't get too excited about dollar shorts beyond this point is still the 2018 open, the 2016 low, 91, 92, 92, 28, critical support. So even if this were to give out, guys, on a closed basis, I really can't get excited on dollar short exposure while above this region. On a weekly basis, not only is it basic trend support off the 2011 lows, it's also those lateral levels that I just noted that have been major pivots in price. All right, so the idea is for waning dollar losses, okay, or waning momentum on the dollar downside. Here's the dollar on the daily chart. Swing low here from the initial opening range low from August. Not a crazy, level, but here's the rebound. It's a break of the monthly opening range yesterday. So this is what I wanted to highlight today. On the downside, you have critical support into that 92.28 level. On the top side, you have the opening range lows for the month, which we're testing basically right now. If this is resistance, if this is a real opening range break, we should find topside resistance pretty soon. I'm not really on that. I'm not on that boat though. Here's what it looks like on the intraday. Okay, and here's my issue. So we had that 92.52 level soft target. The 786 was 92.38. Again, 92.28 is that key support. Here's the first probe. Reversal. The 50% retrace comes in at the weekly opening range low, and that's my near-term bearish inval. We're able to rally through 93.24. I think you're looking for a larger reversal. That said, the immediate advance is at risk heading into that upper parallel. In fact, if we take a basic retracement of just a near-term decline, oops, you'll see that the 50 is right in that same zone. The 38.2, let me clean this up. Comes in right here. So initial resistance right at the 93 handle, 93.24, 93.20. That's the big zone, okay, for the index. And that's what we would need to see break, rupture on a closed basis, at least to give us the near-term validation for reversal. That said, guys, we have to be objective. And while within the confines of this formation, essentially, you're still looking lower. Essentially, you're still looking lower. So we'll see what the dollar does for us here. A little bit of a pop fake, I hope, gives us a little bit of an exhaustion trade, but ultimately we need to see this support sort of start to build. Here's euro, very similar scenario, and that came off of 618 resistance as well. The cleanest of the three, by the way, in my opinion, is sterling, but euro looks like this. Here's number two. Let me take a step back real quick. So the 618 retracement of the decline off the highs that you made, again, for the year back in September, gave you 1859. We talked about that level for a while on the webinar Monday and Tuesday. We closed right there on a closed basis last week. Here's the pullback, and we're making a reversal pattern week. Not much to be left here on the weekly charts, but something to take note of. Again, very similar to the dollar index in what? Opening range for the month, opening range break. We're now testing the opening range high as support. So all of these trades are they really are at make or break levels like right now. Here's what it looks like on the intraday chart. And here's what Euro looked like earlier in the week. As we were heading into that region, we noted that confluence region right into 1850, just above that 1860, right, is what we noted. 1850, 1859 is major reaction level. You got that short spurt right above, but there's the pullback. Here's the whiplash and pull lower. Quick retracement for this near-term advance. Puts, sorry about that, my fibs are all jacked up. Puts the 50% retracement right at slope support and the 618 right at that former swing low for the week, slope support 1762. So we're looking to see what kind of reaction we get on this pullback here. But really, I mean, this is kind of make or break levels for euro and dollar. We're at critical junctures in price, and we're looking to see if we can find some support here on this pullback. On that euro pull. Any questions on either of these? So sterling, that's the one that came off of major resistance, okay? Here's British pound, big resistance level, the level that we were talking about for some time was essentially my favorite Fibonacci confluences. I talk to you guys about this all the time. 618 retracement off the high, 100 off the low gives you 3174, 77. That's exactly where this thing pinged out. Here's what it looks like on the daily chart. And let me show you the weekly real quick. Actually, for sterling is pretty big. All right. So the 618 of the drop, 131.75. The 2020 objective yearly open, 32.50. That gives you a 75 pip region of resistance. Not my favored. I don't really like if you guys zone that big, but it's massive. Okay. Not only is 32.50 the objective yearly open, 32.45 is the 618 of the entire 2018 decline. So you're coming up on big levels, man. It's really, really important we pay attention here for resistance. I'm no longer interested in topside trade for sterling at these levels. I want to see a bigger correction before you try to take a long on this again. But very objective stuff and very clean price action. Here's the ascending slope, basic trend line support off of last month's low, extended off that late high, touch, touch. There's that 618, really nice region. So what does this mean? Well, if this is a break of downtrend resistance, the downside should be limited, okay? Should be limited if we get into a pullback near 3040s. Obviously, I have 30, basically the 30 handle, 129.80 as your bullish inval, but you're basically looking for a support somewhere in this region on the pullback. Here's what it looks like on the daily chart, or on the intraday rather. All right, so this same slope we've been working off the lows has been superb, okay? And a break, right, of that level. We talked about that level last night as resistance. That pullback, finding support right now, right? It's that 131.90 level. I think I told you guys 30.90 last night. So we're there now, right? Gunshot approach, you get some sort of recovery here early in the session, but the strike lower would kind of have me looking for support at those former swing highs for the week. Slope support. If that holds, you look for the resumptive mood. Bullish invalidation still 129.20. Any questions here on sterling? All right, so looking for reaction there. Peso with a interesting move this week. So here's peso. Obviously, the decline kind of teetered out. And the only thing I wanted to really highlight with this is that the weekly opening range remains intact. It's really clean. We're above Fibonacci support. We're below Fibonacci resistance. We're below slope resistance. Look for this break here for guidance. Peso is coiled to the max. Here's what it looks like on the daily chart. You know, we've been talking about this region for quite some time at the 62 or 61.8 retracement, rather, the 1618 extension. So you're talking about 21, 23, 16, 29, 41. We've been talking about this for a while, right? Pivot here back in September, pivot break to the upside, support, This is what we've been doing ever since. Now, last week we did close below, and it's been resistance this whole week. But man, oh man, oh man, waning momentum, right? There's just no momentum behind it. There's no push. So I'm treating this as a weekly opening range break. You know what I mean? With the consequences of a topside breach much more severe. If you breach 2941, you're looking for a larger recovery any way you slice it. You broke downtrend resistance. You broke a major pivot back to the upside, which has caused very nice inflections in price. That would be certainly sort of a breakout play. That said, you're in the trend until you're not, right? And we're just coiling below near-term resistance. On a downside break, the levels are unchanged. You're looking for a move down into that September low. You're looking for that 1618 extension near 2067. So no change on any of those levels, still tight ranges in play. The ranges will break. I just think that the market's kind of taking a little bit of an exhaustion sort of hangover here. See if we can't get some momentum kicks on these. Okay, so that's everything from last night's update. DXY, Sterling, and Peso. Sterling of which the favorite on those three, at least from a cleanly price action standpoint. Previous update, we did Euro, Dollar Yen, and Gold. We already hit Euro. Here's Dollar Yen. So for Dollar Yen, the break was severe, the break was clear, and the break took out all three targets, the last of which was 104.45. To be quite frank with you, I don't want to mess with this here. That decline, that reversal off 105.70 was superb. The break below the weekly open fueled the massive drop. Again, just a really clean move. I don't want to mess with it afterwards. Here's where we are on the daily chart. Okay, and here's what the update looked like earlier in the week. Right? Major key support. If we break, that's your critical zone. Well, there's the key support. It broke. That's your critical zone. The 2019 low, 104.46. You got slope support there as well. We're basically holding. Don't forget on the weekly charts, guys. This thing was at a critical region here too. Right? Turn, break that 618. Again, this is the same zone of support that has caught the lows from July, the lows from September, and the lows in October are all in this range, 104.12 into 104.45. Again, that's the 2019 low and the 100% extension, two equal legs off the high. It's been grounding the decline for, the last few months, guys. Pay attention here. Pay attention here. For me, this is where you get light on Dollar Yen. If you're holding shorts, stops down at 105.20 or just above is the max I'd really have it. And a break below here, you still have 104.12, the bottom of that zone. I would take some more off there. But definitely stops that break even or better. If we break the lows, you're looking for 103.43. It's a pretty dramatic drop from here. Now, one other thing I'd want to just consider on the near-term front, just an extension of the decline off of this month's high. Look where the 100 comes in. Look where the 1618 comes in. Okay, 104.12, 104.01. Just wanted to give you a frame of reference, but you get the picture. So $4 yen, we broke pretty big support. It was a very clean weekly opening range break. We were at resistance, turned lower. Watch out. 104, 104.12 is the bottom end of the support zone. Okay, that needs to go for you to mark resumption. Anything into this zone, you're at risk. Don't fight it. Don't get too stubborn. Big support zone here for Dollar Yen. Any questions? Personally, didn't get a chance to get into this one, although again, the reversal, excuse me, the reversal pattern was very clean. Just didn't get a chance to get in. All right. So that's Dollar Yen. Okay, and number 6. So gold. What do we do with gold? Well, it was a big fake out in my opinion. Again, my humble opinion this week. And To be quite honest, we still don't, again, my humble opinion, we still don't have validation of directional bias. Pistol to my head, Mike Boutros, I'm going to blow your brains out. I'm still short. Okay, that's just pistol a gun approach. Um, Here's my issue with gold. Let me take a step back. We'll take this from the top down. This is really critical this week. I think over the next 2 weeks, you'll see a breakout in gold, the likes of which we haven't seen because we are so coiled. So the level and focus I talked to you guys about 1932 was such a big level. On a near-term front, 1935 came up as a stretch target that if it did hit, you're still looking lower. But the big level was 1932. Well, Mike, what's 1932? Very simple. It's the reversal day close this year, post-high day, post-high week. So the high week, the next week we made a reversal close. That level ended up being a clear pivot in price 1932 and was our bearish invalidation. We ran into that into the start of October. It held last week. We pulled back. This week we rallied again and registered a high at 1931 before failing. Conviction in your targets, right? Love it. All things held constant, yeah, you're bearish below 1932, but support, okay, at the high week close here, 1989, 1897, former record high week close and former record high close, is right here as support. We're sitting there for the last 2 weeks. So the weekly chart really gives you a contractive focus of 1897 into 1932. That's really the major critical range break that we need. In fact, that was essentially last week's range, right? So here's what it looks like on the daily chart. Your monthly opening range remains intact. Here is your October open. You set a high, you set a low, you test the high and it fails, quickly fails. False break of the week of the monthly opening range. Here's monthly open support. Here's a failure again. So what does this mean? All things held constant, again, you try to break it down to as objective approach as possible. Gold is in the monthly opening range, below downtrend support or downtrend resistance. If this breakout is legit, that should be the low. Gold should hold right here. I just don't think that's the case. Here's what it looks like on the intraday. Okay, so there's that downside slope again, right? Really nice pitchfork, caught the lows, really nice median line reaction. Upper parallel kind of messy, and I was telling you about this last week, right? You could take a parallel off that and extend it. It's like, well, now you're starting to like draw, pull straws on this thing, but you know, there was the pivot. So long story short, here was the weekly open. Okay, this is what we look like on the 20th as we continue to consolidate. And I was telling you guys there's a weekly opening range here intact, very clean. Here's the break, right? Pop through, failure ahead of that 38.2. But then what? Complete collapse. And we're now within striking distance of the objective weekly open. So all of that volatility that we saw, the stretch from 1894 all the way to 1931 is going to be null if we drop below 1900 again for the week. So again, I'm of the mindset that you do see a larger correction in gold before broader resumption of the uptrend. I don't have any exposure on this, again, as a disclaimer, but ideal scenario is still in 1880, 1867, okay, is what I really wanted, but gotta address the, oof, even better, 1880, 1881, still a level. Okay, feel free to take a snapshot of this chart, guys. No change to any of the levels, but certainly could be a false break scenario here. If we hold weekly open support and we make it back above 1920, I'm on the resumptive path. That being said, be on the lookout for possible exhaustion here. All right, that is number 6. Commodity block. Let's hit Aussie and Kiwi real quick. Here's Aussie, number 7. So another one that I like a lot this week with a nice little rebound off support. I was giving a lecture to another trade desk here in the city, and we were talking. I was just doing a quick presentation to some of the guys on the sales desk, and they were looking for a trade, and it was Tuesday, and we talked about something that we talked about here in the webinar on Tuesday, and that was the critical, absolutely paramount support inflection zone in Aussie around the 2020 objective, 2019 objective yearly opens. And we talked about this for a while, guys. This is a big zone. Again, objective stuff, yearly opens for this year and last year, major pivots in price last year, major pivots in price this year. There was support. It's the weekly chart, right? So on the initial approach, into the start of the week, it looked pretty darn good. Not only did you have that major critical zone, 70.16, 70.42 yearly open support, but you also had last month's low day close, and downslope support. Parallel resistance, a parallel here, inflection, support. We're right there. So right on Tuesday, it was an obvious long. That one was like a gift. And the first level, the major level of resistance was 71.30. We're there now. Okay, we're there now. So the trade is done. Okay, the void here was filled. The play was into 71.30 as far as I'm concerned. I'm flat. I'm looking for some sort of reaction here. Okay, now on a objective basis, I would have interpreted this as a weekly opening range break. Look for the pullback, fade against that low, looking for the continuation higher. My problem is that the opening range for the week is just below this key zone of resistance. So this could just be a false weekly opening range break. I don't know, which is why for me, limits at 71.30 was the way to play this. Look for support ahead of 70, 74 if this is going to hold higher. Okay, weekly open support is going to be our new near-term bullish invalidation. Certainly, if we hold that low, break above 71.30, you're looking for that resumptive move higher towards slope resistance and the 72 handle. Questions here on Aussie? Quick retracement of the near-term decline just to see some guidance here. Puts the 618 at 71.50. Watch that. Watch that, and let's skip this. All right. Something like that. Questions on Aussie? So for Kiwi, little bit different of a scenario because the rip harder in this scenario, in my humble opinion, validated the break of the weekly opening range. So here's what Kiwi looked like, or here's what Aussie looked like early in the week. That hasn't changed. So guys, again, quickly, the Aussie update, really clean, right? Here's where we were on Tuesday or on Monday, I believe. Drop lower, key support, breakout. We're testing this zone right now. We're testing this zone right now. Kiwi looked like this into the start of the week, right? We were looking for a similar scenario here, but a support bounce right lower at 65.76. You had those former swing lows, uptrend support, bullish inval 65.47. So we're looking for a low ahead of this region. Well, you got it, right? It was really clean, guys. We broke. That didn't hold, but man, just pips ahead of 65.47. That's where the exhaustion happened. Break of the weekly opening range highs back here yesterday does shift the focus higher. Here's that key zone. It's a little bit different because we've had to adjust the extension here, guys, but the 618 remains. That's 66.85 on the long side. Above that yearly open support or resistance rather from last year at 67. So the levels are awesome. Major big resistance is still here now. The new amended extension with the new low here gives you 67.23. Big zone of resistance. You got upslope resistance, downslope resistance, 100% extension, all right up here. But I like it, really nice, like sort of reversal trade. The only thing is, again, like objectivity here. You're going into the monthly opening range highs, okay? And I say that because if you're not already long on this trade, it's a chase any way you slice it. There's no way to responsibly take a stop against this low. I mean, it would be this low, but you're already talking about a 50 pip stop before you even get started here, a 40 pip stop. So caution here. You're heading into the monthly opening range highs. You still have some stacked up resistance level just higher, but if this breaks out, now we're talking, right? In my humble opinion, looks like a possible 1, 2, 3, 4, 5 wave extension, maybe a corrective move off this level, right? Before the ultimate breakout. But the immediate move, if you're not holding a position now, is to actually look for an exhaustion pullback off one of these two levels. If you're holding longs, stops at break even or better, you want to look to take some off these three marks up here, 66.85, 67, and 67.20. Okay, so that's the com block. Number 9 is Swissy, and poor Swissy. I mean, man, remember that level, 90.80, 90.90. We talked about it for months. There was the break, accelerated drop. Here's the recovery, testing that same zone as inflection. You're looking lower below 90.90, period, end of conversation. Now, I would just be cautious because we're heading to the end of the month here closely. Well, not really the end of the month, but I would just say be cautious because of where we are in trend, right? You're essentially heading towards last month's open, last month's range lows. 90.22 is the downside target. Nothing's changed on that front, but sub 90.90, I have to look lower. I can't be bullish on this. If it would recover and close a day back above 90.90, okay, fine. Maybe this is some radical false break. All things held constant, I'm lower sub 99. I'm sorry, 90.90, not 99. Okay, so that's everything on my front, guys, from the FX side. Here's SPX. So the SPX, the only thing I wanted to highlight is how this freakish, okay, formation just continues to hold. It's really weird. Here's what the SPX looked like last night. We've been following this one for a while, guys. If you follow along, always have the previous updates for you. Here's what it looked like on the way up. We highlighted that 88.6 really foreign retracement, kind of a hidden retracement not a lot of people look for. 35.45 was that mark. We talked about this back on the 12th, guys. That was the high. Okay, that was the high. It was the 88.6 retracement. It was up slope resistance. We turned from there. We were looking for key support down at that 618 at 36.44. I'm sorry, 34.44. Yeah, well, we've taken that out too. Here's what it looked like last night. There was that 88.6, pulled right off of, bounced off of uptrend support. That broke last week. 38.2 retracement. We've been in consolidation ever since. I told you guys early in the week to watch this, okay? The ideal scenario, from my humble opinion, would be for a drop first, and this is what I told you when we published this, would be for a drop first here into the 38.2, or even better, here. Get the 100% extension at 34, I'm sorry, 33.67. Oh, here's the real chart. Let me show you the real chart. I can't see the 34.07, excuse me. The 100% extension, 34.07. The February high, 33.97, right? Look at this. That actual high held yesterday, guys, as is. And it pushed lower. It got us the trigger of the 38.2 retracement, so that's got taken out. Here's the bump higher again. You could still get the drive lower. This is my sweet spot, 33.97, 34.07. Okay, I definitely want to see a stronger reaction there if reached. But it's not often, or it's not that often, where you get clean moves like this in equities. So pay attention here. The immediate focus is on the break of this key zone of support, or if you break out of the slope, okay, that 100 is null and void now. I'm gonna get rid of that for you. That retracement needs to be adjusted for the new low. Still resistance, breakout, you'd be looking for that 618. Okay. Questions on SPX? You guys are super quiet today. I didn't see any questions. Aurelian, Jay, Joseph, Martin, Pete, Ted, Josh, any of you guys have any questions, feel free. But right now, as it stands, SPX is curdling into a major support zone. All right, so Martin's got a big list here. Let's go through these. Sterling Kiwi, New Zealand dollar, Sterling Aussie, and Sterling Yen. Okay, let's go through these. First, Sterling Key. All right, so we went over this early in the week, right? Marching, we just missed that level, man. 98.06. Remember we talked about that? It's a 618 retracement of the drop. The parallel for basic slope looked like it wanted to go there. I was kind of looking for a reaction off that mark, and we got it. Building divergence, a higher high, a lower high in the oscillator off resistance. For me, the risk here, for in my humble opinion, Martin, is for a little bit more of a corrective move to the downside before resumption. Now, the retracement does need to be adjusted just a hair to that new high. It's your weekly open. Watch something like this, okay? Marching way too early, okay, to rely on this slope. But on initial approach, if I was in this or taking a position, I'd be looking to follow this. Bear with me 1 second. I just want to see what this looks like. Oof. Okay. That's kind of key support right there. Critical support. 618 of the advance off last week's low, 38.2 of the advance off the monthly lows from September. I don't, see that the slope gradient is necessarily that helpful as far as indication in time, but that's what I'd be looking for. Bottom line, 98 is huge. 198 is huge. A breach above 198, there's really nothing until the 2 spot. So I think the trade here is still the exhaustive move to the downside near term. All right, Martin, does that help? On Sterling Kiwi, that was number 11. Number 12, he says a lot. Right on. Cheers, sir. Sterling Aussie, I'm assuming, is going to be a similar scenario, although probably not as severe as far as the pullback is concerned, because Aussie is obviously a little bit different here. Let me see what the daily chart looks like. Okay. Okay, a little bit more conviction here. Okay. Now, here's my issue with this one. Okay. That's your swing high from July. From June rather. Mid-June swing high. Actually, this is the June open. So let me just work with that. Okay. This is my problem with this trade. This does seem like a monthly opening range break to the upside. So it does keep the focus higher. I'm just trying to think. I'm just gonna be complete frank with you, Marcin. I want the extension to 86.37, 86.78, but it's gonna be determined on Sterling. Sterling's coming off big resistance. I don't know. I don't know. This one's a little bit hairier. I like the pound Kiwi better because the reversal pattern there looks clearer in my humble opinion. Pound Oz, man. I would have expected this one to actually look a little bit cleaner. Let's take a quick near-term look. Here's the near term, Marchin. You know what I mean? What do you want to do with that? So my ideal scenario would be spike higher, failure into this zone, larger correction. If you don't get anything here because you're already, I mean, it's not a very strong divergent signal, but to me, that's waning momentum, right? So if this buckles here, look for support at 38, 81.30s. I think that would be sort of a sweet spot for a hold. Here's your weekly open. Either one of these, to be honest with you, for the next extension higher, but that's essentially what needs to hold for this uptrend to be viable. And my biggest concern with this is not so much, well, let me take a step back. Aussie strength, right, on the Aussie recovery off of key support, that's kind of in question here. But also, how deep does the pound pullback get? Because we have the pound coming off resistance. That was a big zone that we came off of. Loved it. If it holds this support here, and like I said, we breached through 31.70 on those allotted dollar sterling crosses, I do think you get a better play for the resumptive move. But for sterling Oz, a little bit hairy for me here. A little bit hairy for me here. So I hope that offers some clarity on that one. And sterling yen. Looks like we had a breakout of a near-term formation that we've been tracking here. But weekly opening range still remains in, the monthly opening range remains intact. Here's the daily chart again. Yeah, nothing for me here. Nothing for me here. This is the same setup that we talked about essentially on the 9th of the month. Not a damn thing has changed, Marcin. All right. So you're looking at major resistance still at 37.50, 37.87. It's a 50% retrace. That's not why per se, but also the fact that that longer term slope that we have off the highs is in there as well. It's also the monthly opening range high. So objectively, a breach there would give you the breakout move. I'm just not a big CAD yen, sterling yen trader here at this point. I'm looking for yen strength and sterling strength. So no surprising to see a little range bound action here within the monthly opening range. Look for this break to give you the validation. This is one of those pairs that when the monthly opening ranges break, guys, they usually give really nice moves. Let's just go back to the last couple of months. Here's your June opening range break. A little bit messy there. Looked like it was going to retrace, but continued into the close of the month. Here's your August opening range break. Closed into the end of the month at the highs. Last month was a wash. There was no opening range. It was a one straight shot to hell all month long. Here's this month's opening range, right? Set below resistance. Look for the break for guidance. Again, on this one, a gun to my head, I would think that you would correct lower before a larger breakout, but you'd have to play the range as it comes. All right, Marcin, hope that helps. Already discussed, but on the move, Euro Oz and Euro CAD. Sure, we can take a quick look at those two. Euro Oz. Looks like this. So the Euro is obviously someone's been asking about this because I put together this formation for someone. Man, what a really clean move off that 100, huh? 66.76 or 67.76, excuse me. Um, yeah, I like it. I'm not really sure what you're trying to do here. Near term, you're coming to support right at that median line. Bullish invalidation, in my humble opinion, would be at the weekly open on this. But the pivot above 69, it's 66 essentially, is pretty significant in my opinion. Hmm. I hate to do back-to-back key zones per se, but this is also pretty significant for me. Weekly open support, 100% extension gives you a little range here, just below that range, 65.50, 65.25, another 25 pip range. Look for downside exhaustion to one of these zones. Martian. It's an interesting trade. Okay, hope that helps. And last but not least, Ted wants to take a look at CAD Yen, Ted? Sure. CAD Yen. Do I even have a chart of CAD Yen? No, I do not. Let's put one together. Oops. Okay, let me clean this up a little. Monthly opening range break. Don't do anything else. That's all it is. This is super, super clean. Here's your monthly opening range low. You set a high. You try to go for the monthly open. That didn't even work. You try to test the high again. That failed. Hmm. Okay, so that's the daily chart. Ted says, I watch CAD yen and dollar yen for clues for dollar CAD. Interesting. Interesting. I'm always mindful, Ted, not to get too corollary. If I'm bullish this and bullish that, then by default this. But I do like where your head's at with that because in fact, they're very correlated, right? And when you're looking for clarity on a specific pair, it's always good to look at those references. Just don't go with a step-by-step too stringent with that type of thought process. But I do like the idea. Now let me see if anything in near-term price can offer some guidance here. So the broader consolidation we have a view on. Okay, let's just work with the high here. Yeah, this is just a range, Ted. Any way you slice it, brother. It's a consolidation range within the initial monthly opening range. So here's your obvious larger consolidation over the couple of months that we've been tracking. Major resistance, in my humble opinion, still remains at 2017 low, the 618 retracement. Okay, as you can see that a little bit clearer. That's 80.56 on the mark. That's the opening range highs for the month. Monthly open support gives you 79.15. Depending on where we are in time, that'll hit, that slope in a couple, I guess into the close of the month. Watch this. Watch this pitchfork. Watch that there. Oops. Watch that there for support, right into the zone. 79.22, 79.36, 10 pip zone of support. Look for an inflection there for guidance. Does that help, Ted? Interesting pair. I haven't looked at this in a while. He says, got it. Thanks. Big help. Hey, you're more than welcome, man. Always a pleasure. We'll be tracking this one. It's interesting. The response that you got off that 618 2017 low and on the secondary approach even does make me think you look for a deeper drive here. Okay, so that's all I got on my end. I want to thank you guys all for always making my morning so bright. Big thanks to everyone in the room. Best of luck trading this week. Remember, market PMI for US tomorrow. Not a major market mover, but next week we get into durable goods, we get into consumer confidence, we get into more interest rate decisions with the BOC also on tap. So keep the powder dry for 980 positioning heading to the end of the weekend, lighten the load. Levels look good. Let's just see if we can't get a kick for this momentum. Jay, thank you. Marcin, always a pleasure, guys. Have a great weekend. And I'll see you bright and early on the free session on Monday on Daily FX. Right back here on SB Tuesday and Thursday. Cheers, guys.